Okay, let's just dive right in. It is January 17th, 2026. And if you've been anywhere near, anywhere near a trading desk or a financial news terminal lately,
Or even just scrolling through social media, FinTwit is on fire.
exactly,
Right.
you know that the market is acting, well, let's just say it's acting irrational about one very specific sector,
Domestic critical mineral.
domestic critical minerals. There is this intense, almost frantic, bullish urgency in the air right now. It feels really different than the hype cycles we saw back in, 2021 or 2023, doesn't it?
Oh, it feels significantly different because the drivers have fundamentally changed. We aren't just talking about retail speculation anymore.
No.
We are witnessing what I would probably call a historic inflection point. It's the convergence of three massive forces hitting all at once.
Which
You have intense national security imperatives from the Pentagon. You have aggressive federal intervention money flowing into the private sector. And you have a fundamental restructuring of how the entire global supply chain works. I mean, the tectonic plates of the global economy are shifting right under our feet.
and all that capital is just trying to figure out where the new ground is going to rise up.
Precisely.
And sitting right on top of that fault line, you could almost say it's the epicenter of this whole earthquake, is the company we are going to deep dive into today. USA Rare Earth, ticker is USR on the NASDAQ.
Right.
And here's where it gets really, really interesting and honestly a little confusing. Because depending on who you ask, this company is two completely different things.
It's the ultimate Rorschach test for an investor, isn't it? You see what you want to see.
It really is. On one hand, you have the skeptics. And I have to say, when I first looked at the chart, the filings, I put my skeptic hat on pretty tight.
And what did you see?
These guys see a classic money pit. They see share dilution that is, frankly, terrifying.
Right.
We are talking about a 1,400% increase in shares outstanding.
Which is a staggering number. No way around that.
They see huge technical risks in chemical separation, which is notoriously difficult to solve at scale. And they see a mine in Texas that isn't even going to be fully open until late 2028.
Yeah.
So to the skeptics, this is just a mining stock with a very, very expensive valuation, a lot of promises, and a great PR team.
Okay, that's the bear case. And it relies entirely on traditional metrics for, a traditional mining company. But then you have the other side, the insider stance.
Right.
The institutions that are buying in right now, we're talking BlackRock, State Street, Aliska, they are not looking at this as a mining company. Not at all.
So what do they see? A tech company.
They see a defense technology unicorn that's just disguised with dump trucks. They aren't looking at the rocks in the ground. They're looking at the whole mine-to-magnet vertical integration. They're looking at the Barbara Humpton factor. And we will definitely get into her background later. And most importantly, the fact that right now, as we speak, in Q1 2026, they are turning on a massive magnet factory in Oklahoma.
Okay, so there is so much noise here. We've got rumors of a Venezuela effect. We've got Trump trade, geopolitical tailwinds. We have this new facility in Stillwater. So the question we really need to answer today is pretty simple, but it's heavy. Is USR the future of American industrial sovereignty? Or is it a dilution machine that is destined to just burn through investor cash?
To answer that, I think we have to look past the stock price for a minute, and we really need to look at the map, the strategic map.
Right. Before we get into the financials and all the drama, we have to set the stage properly. So I want to do something a little different. We're going to start with a special segment, sort of an intelligence briefing, to frame the problem. The tone here is going to be serious, strategic. This is the why behind the panic.
The threat profile.
Exactly. So let's get into it. Let's strip away the corporate buzzwords and look at the strategic reality. The United States industrial and defense base is currently facing a systemic vulnerability, one that qualifies as a critical national emergency. For about 30 years, we have allowed a dangerous reliance to fester. We are dependent almost entirely on Chinese processing and manufacturing of rare earth elements. Now, a lot of people misunderstand this problem. They think we don't have the resources. That is false. The West has rocks. We can mine rocks all day long. We have plenty of mines. The problem is what's called the midstream gap. It's the refining capability. We can dig the ore out of the ground, but we can't effectively turn those rocks into the separated oxides, metals, and alloys that are required to build high-performance magnets. We lack the chemical processing infrastructure. It is dirty, it is complex, and for decades we outsourced it because it was cheaper and we didn't want the environmental headache. But this is the choke point. Without these specific magnets, sintered neodymium iron boron magnets, our most advanced military hardware does not function. F-35 fighter jets do not fly. Virginia-class submarines do not run silent. The guidance systems on Tomahawk and Javelin missiles do not work. And of course, the drivetrains in electric vehicles do not turn. If China turns off the tap, our defense capabilities grind to a halt. We'd be sitting on piles of rocks with no way to use them. USA Rare Earth, or USR, has positioned itself as the three-part solution to this specific choke point. Part 1 is the Upstream, the Round Top Mountain project in Texas. This isn't just a simple mine, it is a unique polymetallic rhyolite deposit. It contains the heavy rare earths we desperately need, dysprosium and terbium, along with critical gallium for semiconductors and beryllium for aerospace. Part 2 is the Midstream. This is the bridge. USR acquired a UK company called Less Common Metals, or LCM, to handle metallurgy, and they have established a pilot refining plant in Wheat Ridge, Colorado. This is where they are attempting to solve the chemistry problem. And Part 3 is the Downstream, the manufacturing engine, a massive facility in Stillwater, Oklahoma. The timeline for the Texas mine, Round Top, has been aggressively pulled forward, but it's still looking like late 2028 for full operation. However, geopolitical necessity dictates a non-Chinese supply chain today, so USR has accelerated the downstream component. With the Stillwater facility commissioning right now, in Q1 2026, the sovereign supply chain is no longer just a concept on a whiteboard. It is becoming a physical reality. They are building the factory before the mine is even open. Okay, that sets the stakes pretty clearly. I mean, we aren't just talking about selling commodities. We're talking about keeping the military operational.
It's a national security imperative. Full stop.
So let's zoom in on that downstream part, the factory in Stillwater, Oklahoma.
Yeah.
Because from everything I'm reading, this seems to be the linchpin for the entire insider argument. Why is everyone so completely obsessed with Q1 2026?
Because this is what we'd call the real company moment. I mean, think about it. Until now, USR has been a speculative development stage miner.
Right, a story stock.
Exactly. In the eyes of Wall Street, that basically means they have a PowerPoint deck, a mining permit, and a patch of dirt in West Texas. But as of this quarter, mid-January 2026, they are commissioning Line 1A at the Stillwater facility.
So they're actually flipping the switch. This isn't just a press release about a future plan.
They are flipping the switch, and we really need to appreciate the scale here. This is a 310,000 square foot facility.
Which is, how big is that, really?
To give you a sense of scale, that's over 5 football fields under one roof. It is immense. It's designed from the ground up to be the largest sintered neomagnet plant outside of China.
The largest.
Period. We are talking about a projected capacity of 5,000 metric tons annually when it's all built out. This isn't a pilot project or some science experiment in a lab. This is an industrial heavy hitter.
Okay, 5,000 tons. What does that actually mean in the real world? Like, how many cars or missiles is that?
It's significant. So, depending on the size of the motor, that's enough magnetic material for roughly, say, 2 to 3 million electric vehicles.
Wow.
Or thousands upon thousands of advanced missile guidance systems and wind turbines. It puts them on the map globally overnight.
And that completely changes the valuation model, right?
Yeah.
Because now they aren't just a company that's promising to dig stuff up in 2028. They are potentially shipping magnets and generating revenue this year.
Precisely. This is the pivot. They are moving from a cash-burning exploration company to a revenue-generating industrial entity. They are now competing today for long-term offtake contracts with major OEMs.
Original equipment manufacturers.
Right, in the auto industry, in the defense sector. And those OEMs are under incredible pressure right now.
Oh.
Massive pressure. If you are General Motors or Ford and you're building an EV in Detroit, and you want your customers to be able to qualify for those big federal tax credits,
You need domestic content.
you need domestic content. You absolutely cannot source your critical components from a foreign entity of concern, which is government speak for China, basically.
Okay. And for the defense guys.
Oh, it's even more strict. If you are Raytheon or Lockheed Martin, you have strict mandates from the DoD to secure your supply chains domestically. You cannot have a critical component for an F-35 fighter jet that's reliant on an adversary. It's unthinkable. So USR is standing there, waving a flag and saying, we have the magnets right here in Oklahoma ready to ship.
Well, you just said the mine in Texas Round Top isn't opening commercially until late 2028. So you have a giant magnet factory in Oklahoma opening now. Where are they getting the raw material to make the magnets?
Yeah.
Are they just buying it from China? Because if they are, that completely defeats the entire sovereign supply chain narrative.
That is the multi-million-dollar question, and the skeptics are absolutely right to ask it. It is the single most important operational question they face right now, and it brings us to the second pillar of their strategy. the LCM acquisition.
LCM,
Never mind.
that's common metals, right?
Correct. They closed this deal back in November of 2025. LCM is based in the UK. And this acquisition, honestly, it was a masterstroke in bridging that 4-year gap between the factory opening and the mine opening.
What do they do?
LCM is, for all intents and purposes, the only proven large-scale producer of rare earth metals and alloys outside of China. They have 30 years of institutional knowledge.
So they bought the guy who knows how to make the secret sauce, the ingredients for the magnets.
They bought the chef in the kitchen. But wait, you might say, if they're in the UK, isn't that still a foreign supply chain? And where does LCM get their raw materials?
Yeah, that was my next question.
It's a NATO ally, which is a huge distinction that counts for the Department of Defense. And here's the logistics play. By owning LCM, USR secures immediate feedstock capabilities.
So they have a workaround.
It's more than a workaround, it's a strategic bridge. They can source separated rare earth oxides from anywhere in the Western world. Maybe it's from Lynas in Australia, maybe producers in Brazil or Vietnam. They send those oxides to LCM in the UK to be turned into the specific metal alloys they need.
And then they ship that alloy to Oklahoma.
And then ship that alloy to Oklahoma to be pressed into high-performance magnets. It completely de-risks the timeline. They don't have to wait for the Texas mine to be operational to prove to GM or Raytheon that they can make magnets.
It lets them get their foot in the door now?
It lets them establish the customer relationships now, qualify their products with the Department of Defense now, and start generating revenue now.
And then, when Round Top finally comes online in 2028,
they just swap out the feedstock source, they stop buying from Australia and start supplying themselves from their own mine in Texas. It turns a maybe business into a now business. It allows them to capture market share years before they even dig a commercial hole.
Okay, that makes sense. It's clever. It buys them time. I also read something in their filings about swarf recycling in their Colorado pilot plant. Swarf sounds like something from a bad sci-fi movie. What is that?
It does sound like sci-fi, but it's actually just messy industrial reality. When you manufacture these sintered magnets, it's not like you just pour them into a mold. You take a big block of magnetic material, and you have to slice it, dice it, and grind it into very specific shapes.
Like for a phone speaker versus an EV motor.
Exactly. Tiny little rectangles for an iPhone speaker, or big curved shapes for an EV motor. That process, the grinding and cutting, creates a lot of waste powder and scraps. That waste is called swarf.
So it's basically magnetic sawdust.
That is the perfect analogy. But it is highly, highly valuable sawdust because it's already refined material. It's full of neodymium, dysprosium, the expensive stuff.
And they can recycle it.
The Wheat Ridge, Colorado facility is piloting a process to do exactly that. It's the circular economy concept in action.
So they're dumpster diving for dysprosium.
In a very high-tech way, yes. If they can recover that high-value rare earth content from the scrap generated during their own manufacturing in Oklahoma, they create a closed-loop system. It reduces their dependence on new mine feedstock even further, and more importantly, it improves their margins.
Right, because their input cost goes down.
It's just smart business.
All right, so they have the factory, they have the bridge strategy via the UK company, and they have the recycling plan.
Right.
That covers the real company argument, I think. But let's move on. Let's talk about the leadership, because you mentioned the Barbara Humpton factor earlier.
Yes. If you want to understand why the stock is trading like a defense tech firm and not like a dirt digger, you have to look at her.
I've noticed, usually when I'm analyzing the mining company, the CEO is a geologist. You know, they're a guy who loves the rocks, wears a hard hat in his profile picture, and talks about grade tonnage and drill results.
That's the stereotype, and it's often true.
But USR isn't run by a geologist, are they?
Not anymore. Barbara Humpton took over as CEO on October 1st, 2025. Her previous job, she was the CEO of Siemens USA.
Siemens, that's a massive industrial conglomerate. That's not a mining company.
It is a behemoth. We are talking about a company with $20 billion in annual revenue and 50,000 employees under her direct watch. She's not a mining executive. She is an industrial titan. Her appointment signaled a massive intentional shift in USR's identity.
They're signaling to the market.
They're shouting it from the rooftops. They aren't trying to be a mining company anymore. They are trying to be an industrial conglomerate that happens to own a mine.
And she has the government connections, right? I mean, Siemens does a ton of government work.
Oh, absolutely. That's the key. Before running the whole USA division, she led Siemens Government Technologies. She knows federal procurement inside and out. She knows how to talk to the White House. She knows how to navigate the Pentagon's bureaucracy, which is a labyrinth that kills most small companies trying to get a contract.
That is a skill set that a typical mining geologist just doesn't have.
Not even close. Her focus isn't just on digging holes, it's communication with the DoD. She is positioning USR to be the primary beneficiary of all these critical minerals emergency initiatives we keep hearing about. When the government starts handing out nine-figure checks for national security, she makes sure USR is first in line with a pen ready.
She's playing the DC game.
And by all accounts, she's winning. And she's not alone. They have Dr. Alex Moyes as VP of Mining, so they do have the rocks guys handling the technical side. And they have William Robert Steele as CFO managing that war chest of cash. But Humpton is the face, and that face says defense contractor, not miner.
Okay, I'm feeling the hype. I get it. I see the factory. I see the all-star CEO. I see the strategy. But now I have to put my skeptic hat back on.
I was waiting for this.
And I pulled it down tight. Let's talk about the risks. Because when I look at the financials for this company, I see some really scary numbers.
Go ahead, unpack the fear.
Let's start with the most obvious one, the dilution. It is a nightmare. The total number of shares outstanding grew by over 1,400% in the past year.
It's a staggering number. There is no sugarcoating that.
1,400%. If I was an early shareholder in this company, my slice of the pie just got reduced to a microscopic crumb. They're funding this entire war chest by printing stock. How does the market forgive that? That is usually a death sentence for a stock.
Well, that's a fair and powerful critique. The defense is that they have minimal long-term debt on the books, which is good. They aren't being strangled by interest payments. But you're right, the cost of that clean balance sheet has been massive equity dilution. They raised the capital to get to that $400 million cash position by selling off pieces of the company.
But why has the market just shrugged it off?
Because the narrative is so powerful. The market has absorbed it because of the national security hype, but the share count bloat is real and it's a risk.
And speaking of that cash position, let's talk about the burn rate. $400 million sounds like a lot of money.
It is a lot of money.
But Round Top, the actual mine, needs another $400 million, maybe even more, to be fully built out. And I was looking at their last filing, Q2 2025. They posted a net loss of $142.7 million. That's a huge loss.
Okay, but context is important there. You have to read the footnotes. $134 million of that loss was non-cash items. It was accounting adjustments in the fair market value of some financial instruments. The actual adjusted net loss was only about $7.8 million.
Fair, but only $7.8 million is still burning cash every quarter. And here's the thing that really makes me nervous. Insider trading. Michael Blitzer, the chairman of the board, sold 2 million shares back in August 2025.
He did.
He netted something like $33 million from that sale.
It was a big sale.
Now, look, I know insiders sell for many reasons. They're buying a house, a divorce, tax planning, whatever. But when the chairman of the board dumps $33 million worth of stock right before the company is supposed to have its big inflection moment, it raises some serious eyebrows. It feels like he's taking his chips off the table while telling everyone else to bet the house.
It does, and the market noticed at the time. It created a wobble in the stock price. But to be fair, he does still hold a very substantial stake. He didn't sell everything. However, you are right to point out the financial risk. The skeptic's biggest worry is completely valid.
Which is what?
If the Stillwater factory doesn't generate massive profitable revenue immediately, are they going to have to go back to the market and dilute shareholders again in 2027 to get the money to finish the mine?
Exactly. And it's not just the money, it's the chemistry. You said it yourself earlier, the midstream is the hard part. That mine-to-magnet slogan sounds great on a bumper sticker, but physically it is incredibly, incredibly difficult. We need to talk about the technical risk here.
It is the single biggest operational hurdle they face. The continuous operation of solvent extraction, or SX circuits, is notoriously temperamental.
Okay, explain SX circuits to me like I'm 12. Why is this so hard?
Okay, think of it like a giant industrial-scale chemistry set with hundreds of huge tanks called mixer settlers. First, you dissolve the rock concentrate in a strong acid to get all the elements into a liquid solution.
Okay, so you have a toxic soup.
You have a toxic soup. Then you mix that soup with a special organic solvent. It's an oil, basically, that is designed to attract only specific elements. The elements you want move from the acid to the oil. Then you let them separate, like oil and vinegar.
So you're pulling them out one by one.
One by one. The problem is that all the rare earth elements are clustered together on the periodic table. They are almost identical twins atomically with very similar chemical properties. So you have to separate neodymium from praseodymium, dysprosium from terbium. You have to do this separation over and over and over again, sometimes thousands of stages, to get to the 99.9% purity you need.
And if you miss by a fraction of a percent, if you only get to 99.8%,
The magnets don't work, or they crack under pressure, or they demagnetize in high heat, which you definitely do not want happening inside the actuator of an F-35 jet engine.
and Round Top itself, let's be honest about the geology. It have a low TREO grade, that's total rare earth oxide, compared to competitors like MP Materials. MP has a mountain of high-grade ore. USAR has a mountain of, well, lower-grade ore.
That is the polymetallic argument. This goes back to the specific rock type. MP Materials in California has a carbonatite deposit. It's very high grade, rich in light rare earths. USR has rhyolite. It's lower grade, which means you have to process more rock to get the same amount of rare earth out.
So it's just less efficient.
In terms of pure volume for rare earth, yes. But the insider argument is that the rhyolite is actually easier and cheaper to process. You can use heap leaching, which is just trickling acid over big piles of rock. It's much cheaper than the complex crushing and grinding that MP has to do.
And it has other stuff in it.
Exactly. The business case for Round Top isn't just the rare earths. It's rich in the heavy rare earths, the really expensive ones. Plus, you get byproducts like gallium and beryllium. They aren't just selling one product, they're selling a whole suite of critical materials. But you are absolutely right. The technical hurdle of separating all those different elements at scale, first in the Colorado pilot plant and eventually in Texas, is the biggest execution risk they face. If the chemistry fails, the whole vertical chain breaks.
So what we have is a classic high-risk, high-reward scenario. Massive dilution, difficult chemistry, but a potentially game-changing payout if they pull it off. But the market right now seems to be totally ignoring the risk. So let's talk about the geopolitics and the valuation. Because in the first 2 weeks of 2026, this stock is just on a tear.
It surged 48% in just 2 weeks. That's a breakout move by any definition.
And there was this strange rumor that seemed to fuel it. The Venezuela effect. What on earth is that about?
This is fascinating, and it shows you what's really driving the stock. In early January 2026, there was a lot of speculation in diplomatic and defense circles regarding the Orinoco mining arc in Venezuela. It's a region rich in minerals.
Okay.
Rumors started swirling that the U.S. might intervene diplomatically or, otherwise to secure access to those deposits and push Chinese influence out.
And USR stock jumped. Why? They don't have a mine in Venezuela.
It jumped nearly 10% on that rumor alone, because the market now views USR as the designated corporate vehicle for American national interest in critical minerals. The logic is, if the U.S. government goes after rare earths anywhere in the world, whether it's building a domestic mine or through foreign intervention, USR will be the contractor, the chosen champion that gets involved. It shows the stock is trading on geopolitical narratives, not just quarterly earnings.
It's the Trump trade all over again. The America First supply chain thesis.
It absolutely is, and the institutions are buying it. That's the big tell. Look at the ownership data. BlackRock, State Street, Aleska Investment Group. Institutional ownership is up 140% since just the third quarter of 2025.
And that's the shift, isn't it? It's moving from being a retail meme stock, something people trade on Reddit for a laugh, to a core institutional asset. When a firm like BlackRock starts buying millions of shares, it creates a floor under the stock price.
Exactly. They see the analyst consensus, it's a strong buy, with average price targets around $22.75. That's a 35% upside from where we are sitting right now in mid-January. Some of the more bullish analysts are even calling for $45 a share.
So this brings us to the final debate, and the valuation depends entirely on the answer to this question. Is it a mining stock or is it a defense tech stock?
If you view it as a traditional mining stock, it is wildly overpriced. It has radiation risks. There is uranium and thorium in the ore at Round Top that has to be managed. It has all the execution risks we talked about, and it's years away from actually digging commercial ore. A traditional miner at this stage would trade at a much, much lower multiple.
Yeah.
But if you view it as a defense tech stock, as a critical piece of national security infrastructure, then maybe it's cheap. It's a pure play on American mineral sovereignty. The value isn't just the rock in the ground, it's the sovereignty of the magnet. You are paying a premium for the fact that this company secures the supply chain for the entire U.S. military-industrial complex. You pay a premium for security.
It's almost like you're buying an insurance policy against China.
That is exactly what you are buying.
So what does this all mean for you, the listener? We've looked at the shiny new factory, the all-star boss, the scary dilution, and the geopolitical hype. How do you tie this all together?
I think you have to see that USR is at a crossroads. We are watching them walk a very thin tightrope in real time. On one side, you have the promise. They are commissioning the Stillwater facility right now. If that succeeds in Q1 and they start shipping magnets, they become a real industrial manufacturer.
And on the other side of the tightrope is the risk. The technical mining hurdles, the chemistry, the cash burn.
And the entire Barbara Humpton era implies they are betting everything on securing those big government contracts and achieving industrial scale before the cash runs out.
Okay, so here's a provocative thought to leave you with as we wrap up. The whole bull case, the whole market, is betting on the scarcity premium of a non-Chinese supply chain. The assumption is that prices for these materials will stay high because they are critical and we need them.
Right, simple supply and demand.
But consider this. What if China decides to weaponize their dominance? They have done it before, back in 2010. They could flood the global market with cheap rare earths tomorrow, deliberately crash the price, and drive it so low that it bankrupts every single Western competitor. If that happens, the entire economic model for USR completely falls apart. Unless the U.S. government steps in. So the question you really have to ask yourself before you invest is this. Is USR an investment in a company, or is it a bet on the inevitability of a U.S.-China trade war? Because if you buy this stock, what you are really betting on is that the U.S. government will not let this company fail, no matter what the commodity price does. You're betting on a bailout or a price floor.
A government-backed backstop.
It's a heavy concept to chew on. So our advice is to watch the Q1 announcements from that Stillwater facility very, very closely.
That is the litmus test. That tells you if the real company moment has truly arrived.
That's all for this deep dive. Keep your eyes on the news. We'll catch you next time.